Guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about a very simple breakout strategy you guys can start doing to start making money from swing trading and trading in the market. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. It's awesome. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've used over the past 7 years of swing trading. We talk about how to set up your scanners, how to find entries, how to, understand the stop loss, the psychology, the emotions behind trading. So check it out down below, and you guys can use code XMISS24 to get 51% off, which is one of the largest sales we've ever done. So make sure you guys sign up before the holiday's over. So sign up, invest into yourself for 2025. And guys, let's turn to the computer and break down this trade here. All right, so the first thing here that I kind of want to talk about is going to be the broker. Having a good broker or at least good charting is super, super important, because if you don't have moving average lines, if you can't draw trend lines or have basic indicators, it's going to be very hard for you to trade. So I would highly recommend MOOMOO, which is the broker I am using right now. They're awesome. They offer those good charting tools, drawing tools, but one of the things that I really like about them for just general, beginners is paper trading. If you guys are still practicing your entries, your exits, your risk management, all that good stuff, they do have an amazing paper trading software, so I highly recommend them. I'll also just put a link to them down below, so if you guys want to sign up, you guys can get up to 20 free stock just by signing up with them. So make sure you guys click that link, sign up, and let's talk about here this trade here, and this is actually on NVIDIA. NVIDIA stock here is up about 2.6% today, and one of the main reasons I absolutely love this one here is as we look at the daily, we have this good trend line, right? If we remove all these moving average lines and all this stuff here, you guys can see just how strong the support on this stock is, right? So now here, what we saw is this, right? We saw this stock go from about 150 all the way down to 126. Now, there's two ways you guys can look at sell-off. The first way is just fearful. Oh my gosh, okay, I'm going to start selling my stock. This thing's never going to recover. Or you always look at sell-off as opportunity. And that's kind of what I looked at it here. So as we pull these moving average lines back up, you guys can see we're kind of hit that 90-day moving average line and curled its way up. That's exactly what we want to see happen. So as we look at a different time frame like the hourly, it looks a little different, but each candlestick now represents 1 hour of trading. So as a swing trader, when you're like looking at opportunity, it's always important to look at several different time frames, because one time frame could be telling you one thing and then another could be telling you another. So do your due diligence and look at all the time frames you feel is important. For me, I look at the daily and the hourly for like 99% of my trades. So what do we notice here about this stock, right? Like I said, we had that good sell-off from that 150 range all the way down to 126. So what we actually did here, we did a couple of things. Now, the first thing we did is we actually took a small trade right here, okay, the other day. So when the stock sold off, we got in, it had heavy support in this range. So I was very confident with a couple of things. So if we break this down a little better here, so let's pull this up. All right. So if we enter right near and around that 129 mark, keeping our stop loss about 2% from, the 2% for our stop loss. Now we can have a possible push back up to this target price, which is just the general hourly trend, right? And that's kind of what I thought, and that gives about a 2.5 risk versus reward there, which is decent, right? The biggest thing about those types of trades is you just have to have that good stop loss, and it has to be a trend you feel is valid. So I was very confident with that push up to these levels. And that's kind of what we saw happen, right? We saw this stock here, sell off. We entered here, and then it just kind of fell flat and went like this, right? And curled its way up. So, by the time we were able to actually trade this, because all of this stuff was after hours or pre-market. So we really didn't really have that much access to the market, just because when you trade pre-market or after hours, it's very light volume and it can often swing stocks a little bit. And that's kind of what we saw, right? So the stock curled down, curled up, and then we had this general trend. So this is where we actually took a lot of profit. Now, we took a lot of profit this day, and we made a good amount of money, $550. And then we're watching this thing, and I'm like, okay, if we can get a breakout above it, so the 1 hour past the market open, I go, okay, if this thing can start squeezing out, I'm just going to do an after hours trade and see if we can get in. We're able to get in near and around that 135 mark. So actually not the lowest at like 134 or 133, near and around the 135. So I felt like that was valid there. So now we had our another entry price here. We sold the stock here, 550. Now we're getting in for the breakout. You might be saying, well, Carter, why didn't you just hold through this, right? So when you're approaching resistance, there's several ways you guys can do it. The first way is just sell it. That's what I did. Make guaranteed profit and then move on and evaluate. And that's kind of what I felt like was valid. So we were able to get in on it. The stock has rallied its way up. So now you might be saying, Carter, what's the risk versus reward for this one? So I wanted to keep the target price actually a little bit higher because now it's breaking out of the trend. So I do think like a valid target is going to be that 142 range, so up in here. And if we can keep our stop loss right near and around that 90-day moving average line, that's going to be a 4-to-1 risk versus reward. So you might be saying, Carter, why do you care so much about that? Now I will show you. I will absolutely show you. So looking at this trade return calculator that I love, imagine you guys were starting out with $500, okay? You guys take a trade like this once a week, so that's 52 trades. We risked that 2%. Now, we'll talk about the first trade. So that was about a 2.4 risk versus reward. So imagine you guys are 50-50 on your trades. We calculate that out. So over the course, right, of 1 year, you'll grow your account to about $1,000, which is really, really good. Now imagine, most of you guys starting out won't be 50-50. Maybe you'll be like 40. So 40% of the stocks you guys buy are winners, 60% are losers. You are still profitable. And this is with the 2.4 risk versus reward. Imagine if you guys 35% win rate, right? You're still making money. You made $85, which might not seem like much, but hey, you're profitable. And the only thing that's separating you from making more money is just your account size. Now, as we look at this, imagine if your risk versus reward on this trade was 4.25. Let's look at this now. Look at that. With a 35% win rate over the course of a year, you're looking at about $1,000. But if you're 50-50, guys, you are absolutely killing it with about $2,400 in profit. So when you constantly see people online talk about risk management, this is kind of what they mean, is having, your stop, your target price, realistic stop loss, realistic target price. You don't just take this and move it to $500 because you randomly think it. No, you look at previous levels. So we know there's resistance there. We know the stock can get there. And that's what you want to seek out. And so now the stock has already moved up today alone, 2.7%. We're letting this thing rally its way up, keeping our stop loss right now near and around that 136, 137 range, where if it dips down, we made 2%. I'll take 2% any day of the week. This is what we look, this is how we do it. So this is a very simple breakout strategy you guys can start using, whether you're a beginner or I've been doing this for 7 years now, and this is awesome. So I hope you guys all enjoyed it. If you guys do, hit that like button, subscribe. If you guys want to learn more about swing trading, check out our school, code XMIS24 to get 51% off. I'll put the code down below. I'll put everything down below for you guys pinned in the comments. So we'll see you guys. Hope you guys enjoyed it. Take care.